As an introduction to U.S. OMNI and TSACG compliance services becoming the third-party administrator for Harrison Board of Education, I wanted to take the time and introduce our services and other helpful information. My name is Jamila McDuffie, and I will be talking to you all today about the 403B and 457B plans available to you, how to enroll, and what you can come to U.S. OMNI and TSACG compliance services for as the third-party administrator. Here you will see a brief overview of our firm. We have been in business for over 25 years, always solely focusing on independent 403B and 457B plan administration. We currently administer over 7,500 plans on behalf of 3.2 million participants across 48 states. So as your 403B and 457B plan administrator, I will be talking to you today about how we will help you navigate your 403B and 457B plan at Harrison Board of Education. We'll discuss the enrollment process and how to submit a salary reduction agreement, also known as an SRA. We'll also talk about 403B and 457B transactions and how to request a transaction through our online distribution system. 403B and 457B plans are supplemental retirement options that allow employees of public schools to contribute a portion of their salary to save for retirement. 457B limits are independent. The contribution limit for a 457B plan is not reduced by contributions to a 403B. This allows employees to participate in both plans and increase their tax-deferred savings opportunities. With a 457B plan, you will avoid early withdrawal penalties. Unlike the 403B plan, distributions from a 457B plan taken before age 59 and a half are not subject to the additional 10% IRS penalty. I want to remind everyone that a 403B is a supplemental retirement plan. It is in addition to your pension and Social Security income. So a lot of people will use the 403B to supplement their other retirement income, depending on their retirement goals. Personal retirement savings can be accumulated two ways. The first being pre-tax contributions. Pre-tax contributions are retirement savings that are deducted from your paycheck before any taxes are taken out. This reduces your taxable income for the year, meaning you pay less in taxes up front. The money you contribute grows tax deferred, so you won't pay taxes on it until you withdraw it in retirement, at which point it will be taxed as income. The second option would be post-tax contributions. Post-tax, also known as after-tax contributions, are retirement savings that are made after income taxes have been deducted from your paycheck. This means you pay taxes on the money now, but when you withdraw it in retirement, you don't have to pay taxes on the contributions or any of the growth. On this next slide, I will give you a better example of how pre-tax versus after-tax contributions work. If you take a look at the chart here, this is all based off of a gross income of $1,000 per pay period. Using today's tax rates, you will notice that there is a tax savings of $27.30 with pre-tax contributions to the 403B plan. However, no one knows what the tax rates will be 30 years from now, so it may make sense for individuals to pay the taxes now and then have tax-free deductions 30 years from now. But like I said in the last slide, this is a personal decision and should be based on your financial situation and retirement goals. We always recommend working with a financial advisor to help determine what is the best option for you. In the next two slides, I will show you scenarios where pre-tax contributions and Roth contributions might make sense. So in this scenario, Mary and Jim are both employed and they file their taxes jointly. Mary is a teacher at a public school and Jim works in the private sector. They both earn $45,000 annually. Their combined income of $90,000 puts them in a higher tax bracket. After speaking with their financial advisor, Mary decides to contribute $5,000 to her employer's 403B plan, helping to reduce their taxable income. By contributing $5,000 in pre-tax contributions to the 403B, Mary reduces their taxable income from $90,000 to $85,000. This would put them in a lower tax bracket, helping to reduce their taxable income. So not only was Mary able to contribute $5,000 to her 403B, but she has also helped save the family in federal income taxes. In this next scenario, Kyle is a 25-year-old teacher at a public school who has just started his career. Being early in his career, Kyle is in a lower tax bracket, but as he gains experience and moves up, he expects his income and tax bracket to increase. After doing some research and being uncertain on what interest rates will be in the future, Kyle decides that contributing to the Roth 403B plan makes the most sense for him. Since Kyle's Roth contributions are taxed now, they are able to grow tax-free. When Kyle retires, not only can he withdraw his contributions that he made tax-free, but he can also withdraw any earnings that he's earned tax-free as well. In this example, Kyle contributes $5,000 to his Roth 403B every year until he turns 65. If his Roth 403B averages a 7% annual return, Kyle would have saved roughly $998,000 in tax-free money toward retirement. And remember, the 403B plan is a supplemental plan. This would be in addition to Kyle's pension benefits and Social Security benefits. And so I hope these two scenarios were able to help give you a better understanding of how pre-tax 403B contributions and Roth 403B contributions work. Provided are the maximum allowable contribution limits for 2025. You can see that the base limit for this year is $23,500. It went up $500 from the previous year. Then you'll notice that there are a couple of special catch-up provisions allowed in 403B and 457B plans that certain employees can take advantage of. First, you have the age-based catch-up. This provision is pretty simple to understand. Essentially, if you are over the age of 50, then you are allowed to contribute an additional $7,500 of your salary to the plan, raising the limit to $31,000 for 2025. If you are the age 60, 61, 62, or 63, you may contribute an additional $11,250 of your salary to the plan instead of $7,500. The rule states that the employee is eligible to begin age-based catch-up contributions starting January 1st of the year that the employee turns the age of 50. So if you were born in the year 1975 or earlier, then you are eligible to take advantage of this special catch-up contribution. Here, I will show you how to find Harrison Board of Education's dedicated plan detail page located on our website. First, you would go to www.tsacg.com. Then, you would click on Plan Sponsor Pages. The next screen will display a list of states. From that list of states, you would select New Jersey. On the very next screen, it will show you different districts located within that state. On that screen, you would select Harrison Board of Education in Hudson County. Now you are at Harrison Board of Education's dedicated plan detail page. The information you will need for enrollment, Transaction approvals and product neutral education is located on this page. Once you are ready to enroll in a 403B or 457B plan, you would review the list of authorized investment providers on the district's dedicated plan detail page, and then reach out to the investment provider of your choice to open a new account. This is the most important step, as you must have an account opened first. Once the account is opened, you would select the appropriate salary reduction agreement, also known as an SRA. An SRA is an agreement between you and the district to have funds payroll deducted for your 403B or 457B supplemental retirement plan. Once your SRA is submitted, funds would be deducted from your next payroll and sent to your selected investment provider. Once you have selected the online SRA option, you will be immediately taken to a screen to start the transaction. Once you select Start Transaction, you will be taken to a screen asking for an employee certification, along with asking for your employer state and your employer's name. On the next screen, you will be asked to input your Social Security number. If this is your first time submitting an SRA on our website, you will see a pop-up box that says, "Please note, the Social Security number provided was not found." Please select Continue. On the next screen, you will be asked to enter your remaining details. After entering your personal details, you'll be taken to a screen to enter your contribution information. Here, you'll be able to select your effective date or payroll date that you would like your contributions to start or change or stop. You would be able to input an amount based on dollar or percentage. And you would also be able to select your investment provider. That would be the company that you have opened an account with. Additional resources that can be found on our website are as follows. You are provided product neutral education on your dedicated plan detail page. The Annual Retirement Benefits Guide is a valuable resource that offers a comprehensive overview of investment product options, details on various investment fees, and essential information about plan transactions. Below the Annual Retirement Benefits Guide, you have access to your district's Meaningful Notice. The 403B Meaningful Notice provides employees with clear and detailed information about the key features of your district's 403B retirement plan. And last but not least, we have our Plan Participation Guide. The Plan Participation Guide was developed to provide resource information on understanding your plan, why you should consider contributing. It provides additional online resources, instructions on submitting distributions and SRAs, and how to enroll. Next, we will discuss where to complete transaction approvals. Transaction paperwork from your investment provider will not be signed by the district. The most efficient and timely way to submit transactions for review is the use of our online distribution system. This advanced web-based system allows participants and advisors alike to obtain immediate approval certification for eligible distributions. This system will provide all transaction approvals. Some examples of transactions would be to initiate a loan, withdraw money, move money, or buy service credits. You can access our online distribution system on your dedicated plan detail page by clicking the link located on the blue ribbon, transaction.tsacg.com. Once you complete all the requested information and submit, you will be provided with a certificate of approval. You would give your investment provider that certificate of approval along with your investment provider's paperwork for processing on their end. If you need help walking through any of the processes that we've reviewed today, please call our customer care center and they can assist.